Hello everyone, good morning. I hope everybody's doing good. So this is gonna be the lecture of our 3-day workshop. This is gonna be our third lecture on order block, and in this lecture we'll be going over a complete order block model that appears at 9:30, and I named it my 9:30 high probability order block model. This model appears after the Judas. So now we'll be going over the model in details. First, we'll be talking about the basic first two slides, and then we'll be going over how the pattern appears and how it looks on chart. So let's take a look at the basic. To understand this model, you will first have to know how price distributes liquidity inside 9:30. So at 9:30, this is when our New York Stock Exchange gets open. We get to see much more volatility at this time. So price does distributes liquidity in three types inside this 9:30 time window. The distribution of the liquidity comes in three stages. First one is one stage, second one is two stage, and third one is seek and destroy. I talked more about this in details inside my mentorship. So here we are only going to be talking about two stage delivery, where our high probability order block pattern will appear. We don't really need to know about one stage and seek and destroy. This is where our model will not appear. So we are only going to be focusing in this lecture inside two stage delivery. So in two stage delivery, what price does, it builds liquidity prior to 9:30 in a form of relative equal high or relative equal low, and at 9:30 it goes for that stop. So we all know generally 9:30 goes for 9:30 candle goes for the stops, where we have buy stop or sell stop. So that's what price basically does. So let's take a look at the basic structure of the pattern. Here you can see this is our 9:30 Judas going for the buy stop. As I told you guys, 9:30 distribution of the liquidity, 9:30 candle, majority of the time you will see is going for the stop, either buy stop or sell stop. And here you can see we took buy stop, which was in a form of relative equal high, multiple swing highs, forming this relative equal high. So we have a lot of stops up here. 9:30 came up. This is our 9:30 Judas. So this 9:30 Judas later on in time becomes our order block. 9:30 high probability order block. We'll be going over a couple of rules. This model has a couple of rules that you guys need to know. But for the basic, this is the pattern. Price did the stop until 9:30 delivery. This candle here, all of these up close candle, this is what we'll be considering as our Judas swing. And after you get the reversal, after you see a couple of down close candles, the price finally went lower and closed the candle's body below this down up close candle. When price did that, these up close candle became our break order block. So we'll be going over these basic rules that you need to know to operate with these models in our next upcoming slides. But for now, this is how our order block pattern will be looking. It has context behind it. We need a stop hunt. We need to find out buy stop and sell stop prior to 9:30, because 9:30 Judas will be going for stop, right? So we will have to find out 9:30 where price can go at 9:30 prior to 9:30, and this is what I'm going to be showing you guys in next upcoming slides. But for now, this is our basic pattern. I hope you guys understood how this pattern is working here. We already talked about this pattern in our last two lectures in details. Now let's take a look at the next slide. Okay, wait, I forgot to talk about why I'm referring to this two-stage delivery. It's two-stage because price is doing two things here. It's balancing the delivery by going for stops. 9:30 goes for the stops, so 9:30 Judas is appearing here, and then after 9:30 Judas we usually get to see a reversal. Then price goes for the remaining stops. So first price did buy stops. Next time probably price will do sell stop if these order blocks are getting activated. So we'll be talking more about this in our upcoming slides. Let's take a look at our next slide. In this model, we have some key points to remember. Our first key key point is Judas will often present the model. Sometimes you will see price presenting the order block, price doing stop hunt, that means manipulation prior to 9:30. Sometimes the Judas happens prior to 9:30, and it's very less of the time, but when it happens you can also engage with this scenario. But majority of the time you will see the after the Judas we are seeing the model appearing. So 9:30 we'll see price doing going for the stop, and then after the 9:30, after the Judas, will our model appear. So majority of the time you'll see our model order block appearing after the 9:30 Judas. High probability 9:30 order block pattern will appear in two ways. With stop hunt, this is very important, okay, and with SMT. So you require these two things to consider the scenario high probability. So if the order block is coming with a stop hunt, then it's a high probability order block, and when price finally goes below these order blocks, you can confirm high probability market structure shift. Without a stop hunt, you won't have the model, so you are not going to be operating if you are not seeing a stop hunt or a SMT. Price is allowed to go lower, and you are allowed to trust this model only if it's coming with a SMT when there's no stop hunt. If there's no stop hunt, there's no SMT, then you are not going to be engaging with this model. Very simple rules, you have to remember this. So here I'm showing the example. You can see we have a stop hunt after the price went lower, closed the candle's body below. So now this is a high probability model for short once we get to see price retesting these up close candles. If there's no stop hunt, suppose this we fail to go high above the swing high, but there's a SMT, then you can also trust the structure if there's a SMT. Model must be avoided if it's not coming with either stop hunt or SMT. So you're in with this model, high probability scenario is when you have this structure appearing with SMT and stop hunt. You are not going to be engaging in low probability scenario, and low probability scenario is when price is not when your model, when order block is not appearing with a stop hunt or with a SMT. Very likely when you don't see a SMT and stop hunt, very likely that time price will do a seek and destroy. So very important that you keep these in your notes. These points are very important. When price is not doing any stop hunt at 9:30, okay, when Judas is not going for the stop, then very likely we'll see after 9:30 price doing seek and destroy. So for us to expect low resistance distribution, clean delivery, fast delivery, and to expect high probability scenario with our model, we'll have to see stop hunt or SMT. Sometimes you can also see both of them appearing together, stop hunt and SMT. That makes our scenario more high probability. Sometimes they will either appear alone with a SMT and with just a stop hunt. There's not going to be SMT with a stop hunt. So you'll have to train your eyes with this structure. Very, very easy, very basic structure, but these are the rules that making it more high probability. We'll be talking about more rules in our next slide. This model delivers 2R to 4R. Ideal target is 2R. If you are not going to be targeting a lower than 2R, so minimum that you are going to be targeting is 2R. If the structure, if the target, everything is aligning and you are getting 2R, you are going to be going with the model. If it's not providing 2R, you're not going to be engaging that offers 1R, 1.5R or stuff like that, because at 9:30 price will provide, if price is doing one stage or two stage delivery, price will provide minimum 2R. If price is not doing one or two stage, it will do seek and destroy, and that's when it will provide less than 2R. So it's always high probability that you understand the scenario, you identify if it's high probability or low probability. I already talked about how can you identify a high probability and a low probability scenario with this model. We'll be talking about more rules in our next slide, but these are the basic. Now let's take a look at our next slide. In this slide, we'll be talking about the model and the rules for the model itself. These are the advanced rules. So first I introduced to you the basic. Now I'll be going over the advanced rules with this model. Find out strong liquidities where buy or sell stops reside prior to 9:30. This is our first point. each and every point we'll have an example in our next slide, so don't worry about that. After that, you will have to the second rule is at 9:30 expect price to go for either buy or sell stop accordingly with the scenario. I'm saying here accordingly with the scenario because price will either provide relative equal high or relative equal low, or sometimes it will provide both. So we'll have to find out by aligning higher time frame which stop price will go for first, or you can just wait after price does the stop hunt. If you don't want to take a turtle soup entry, you won't have to know where price is going to do a stop hunt. Okay, when you have liquidity in both sides of the marketplace, if you want to do a turtle soup entry, then you will have to know from where price can reverse, where price will go first, and you get to know that by looking at higher time frame. We are not going to be talking about higher time frame scenarios here. That's what we're going to be covering in our backtesting session. All right, so this is our second rule. At 9:30 expect price to go for either buy or sell stop, and that's your Judas. So first you identify where the buy and sell stops are. Next you wait for the Judas. The third is Judas will present the upcoming order blocks. You wait for price to present the order block by confirming the Judas. Once price confirms the reversal by closing a candle's body below the order block, you can trust it as a confirmed market reversal or market structure shift. Every point here will have an example in our next slide. Our fifth point is execution can be made at the retest of the inversion or the order block. Okay, so I wrote it wrong right here. I'm gonna be correcting it. All right, now it's good. So it was supposed to be order block, not inversion. So I corrected it. In execution can be made at the retest of the order block after price goes below the Judas lag and closes a candle's body. Only then you will have a confirmed order block and a confirmed reversal. So you are waiting for price to do the Judas, then price to go below the Judas and close a candle's body, and then you will have your high probability order block. Number 6 point is stop loss will be in a bullish scenario at the lower quadrant or below the order block. Depends on the scenario. If the scenario presents to you that you can place a stop loss at the lower quadrant, then you can do it. If the scenario is telling you you have to put your stop loss below the order block in a bullish scenario, then that's how we'll be doing it. But usually that's where we put our stop in a bullish scenario, lower quadrant, or below the order block in a bearish scenario, upper quadrant, or above the order block. Target will be relative equal high or low trend line liquidity unfilled fair value gap. Very easy. Now let's take a look at our next slide, and that's where I'm going to be presenting to you all the rules here, all the points with an example. Now this is our visual representation of 930 model. Very easy. One, you have numbers here. You can see 1 2 3 4 5 6 7. We have 7 points, and these 7 points are from our previous 7 these rules, previous slide. So now let's take a look what we have to do. So first we'll have to find out where the strong targets are, where buy stops and sell stops are prior to 9:30. So this is our number 1 point. Prior to 9:30, you identify where the strong liquidities are. So you can see that this is our 9:30 Judas, right? And this is our 9:30 stop hunt. So prior to 9:30, we have liquidity towards buy side in a form of equal high and liquidity towards sell side in a form of equal low. So we have liquidity in both sides. Now, in our second point, at 9:30, expect price to go for either buy or sell stop, right? According to with the scenario. Here I'm saying accordingly with the scenario, because if you want to do turtle soup entry, only then you will have to know where price will do the Judas, okay? If you want to take safe entry, if you are a beginner, you don't want to take turtle soup, you're good with a 2-hour consistent return, you are good with safe return, then you don't have to know where price will do the Judas, okay? You can wait for price to do the Judas and then look for the model. So this is our second point. Our third point is Judas will present the upcoming order block. So let's take a look at our second and third point. This is our Judas lag, right? Prior to 9:30, we identified where we have strong liquidities, where we have buy and sell stop. At 9:30, price did the stop hunt. And after 9:30, this is our third point. Once price closes a candle's body below this up close candle of the Judas leg, that's when you will have your model getting activated. That's when you will have order block getting activated. So second point, Judas did the stop hunt. Third point, you wait for price to go below the Judas leg, close the candle's body. Fourth point, what was our fourth point? Once price confirms the reversal by closing a candle's body below the order block, you can trust it as a confirmed market reversal. So fourth point, right here, price closed the candle's body below these up close candles, right? So these up close candles are now order block. Fifth point was you can engage at the retest, and here you are engaging at the retest of these order blocks. Now remember, if you are looking at 1 minute chart, 1 minute, 3 minute, or 5 minute chart, you are going to be entering at the retest of the candle's body. The same pattern, same structure can be found on at higher time frame, like at hourly, 4 hour, and daily or weekly chart. But that time you're not going to be using 930 as a Judas, to be honest. This model is only applicable and high probability on lower time frame, like 1, 3, and 5 minute chart. Makes sense? So there goes your fifth point. And your sixth point was how to manage the stop. So I told you guys it depends on the scenario. In a bearish scenario, you're going to be putting it at the upper quadrant or at the swing high, right? So here I'm putting it at the upper quadrant. To understand why am I putting it at the upper quadrant, why not at the high, first you will have to know that the rules of 3 PD arrays. Okay, if 3 PD arrays are getting broken against your trade, your stop loss is going to be next. So you're going to be putting your stop loss up above 3 opposing PD arrays. So here, let's find out our 3 opposing PD arrays. This is the fair value gap right we have here, right? This is a CB. This is our bearish fair value gap. We have one here, another one. So I'm going to be marking both of them together. And that's how I taught you guys as well. When the two fair value gaps are coming together, you mark both of them. So there goes our first PDA. Our second PDA is the order block, right? And the third PDA is going to be the mean threshold of the order block. So mean threshold of the order block must be respected, which is coming right here at the end of the order block, right? I'm just eyeballing it. You can measure it when it's appearing on your chart. But with experience, you will also going to be eyeballing it in future. So here comes your mean threshold. So first PDA is this bearish fair value gap, second PDA is the order block, and the third PDA is the mean threshold. So that's why the stop is coming at the upper quadrant. Makes sense? So suppose there's no fair value gap, right? How you are going to be managing your stop then? Are you going to be putting your stop at the upper quadrant? No, that time you're going to be putting your stop up here, because you don't have that third PDA, right? So suppose there's no fair value gap, how am I going to be seeing it? First, I don't want to see price violating the mean threshold. So second PDA, and the third is up here where I have the stop. So if you see a fair value gap, or sometimes you will also see an inversion. In our next slide, I'll be showing you an example with that as well. So if suppose that you see an inversion coming here, so your stop is going to be just above the inversion. You don't really have to put it above the order block because of how price, if price is presenting you any PDA here that you can use. The PDA can come in a form of fair value gap. Price can also form a order block here that you can use as a reclaimed order block later in time. Price can also form a fair value gap here that will get violated, and you can use it as an inversion and put your stop loss above it. So you really have to understand how to manage your stop loss accordingly with the scenario, and that's what we'll be talking more about in our backtesting session. So I hope you guys understood the example. It was very easy. Now let's take a look at our next example, and that example is going to be coming with a inversion. And this is our last example. This is our high probability order block model with inversion. So here, very, very high probability structure, and appears a lot of the time, majority of the time I see it appearing at 9:30. So in a month, you can expect this pattern to show itself 4 to 5 times, okay, in a month. There are different scenarios, there are different patterns that appear at 9:30. So every one of them will appear, price will also do seek and destroy. So all together, we only get to see 5 to 10 setups at 9:30 in a month or two. So in a month on average you get to see 3 to 4, right? And into if you are thinking like in 2-3 months you get to see 10 or 15 setups at 9:30. So at 9:30 price is not going to present setup every single day, but when it does, it's going to be very clean like this, and that's when you know that you have a trade, right? It's that simple. If the setup is there, it will be engaging. It's not going to be forming every single day, so you're not going to be forcing the setup every single day. So now let's talk about this structure here. Here you can see we have some stop hunt, some order block, right? So when an order block is coming with a stop hunt, that becomes our high probability order block. Price came down. This is our 9:30 Judas, right? 9:30 prior to 9:30. Okay, accordingly with our first rule, you first have to identify where we have stops prior to 9:30, right? So this is our 9:30 candle that went for the stops down here, sell stop. But prior to 9:30, what we had this stop down here. We had this order block as a support. There's no relative equal low, right? But we had a lot of relative equal high up here. See, relative equal high, and finally buy side liquidity is staying above the swing high. So at 9:30, you are just waiting for the Judas to happen. Judas happened towards sell side, right? You were waiting for price to get support from the order block. Price got support from the order block. Price, this is the candle, bullish candle, second candle. And then you are waiting for price to close the candle's body above the order block and above the inversion. So see, in this example, we have a inversion. Now I'm showing this example to you because when price presenting this structure with the inversion, you can just put your stop below the inversion. You are going to be safe, to be honest, okay? If you are correct understanding the DOL, finding out the DOL, and if price is not distributing liquidity in high resistance, that price will not even violate the mean threshold of the inversion, as you can see in this example. Price came up, closed the candle's body above the Judas. So this is our Judas lag, right? Close the candle's body. This is our 9:30 high probability Judas order block. Inversion, your limit order will be here. Price retested this inversion and then boom, moved towards buy side where we had more stops, more buy stops, right? So this is our two-stage distribution, high probability for our order block. So I hope you guys understood our 9:30 order block model. Very simple, very basic. So this is gonna be very likely our last lecture on order block. I'm probably gonna cover one more, I'm not sure, so I'll have to make sure on that. And we're gonna be now covering day 2 lectures. This week we'll be covering a lot of day 2 lectures, and I was not able to cover our lectures with the days because I'm going through a lot in my real life. I have an uncle who is very sick, and he is the only person, like I'm me and my brother, we are the only person like taking care of him. He has been sick for the last couple of years, but recently his health got really worse. So for me it's very hard getting these days, like managing time to make all this content and slides. It takes a lot of time from my part. And when I announced the 2024 workshop, my uncle was not sick that time, so he got sick last week, and I had plans to do lectures last week, and that's why I couldn't do it. But I hope you guys will understand. He is suffering from cancer, so if you are keep him in your prayers. I want him to be okay. He has been a very good helping hand throughout my whole trading journey as well as in my personal life. So I'm trying my best to make everything work out. So I hope you guys will understand as well. This week I'm free. My uncle is feeling better, so this week I'm doing good. My uncle is doing good, so I'm free. We're going to be covering a couple more lectures this week in our day 2. So by in between 2 weeks, I think we'll be done with our 3-day workshop. And I hope you guys will understand why we got delayed on our 3-day workshop. It's nothing that I don't want to drop the lecture, but because of the situation that I'm facing in real life. There will be more lecture coming inside our 3-day workshop, and trust me, you will love it at the end. So all that I'm going to be asking from you, just be a little bit more patient. Give me the time that I need, and I'll present to you what you need in a very good way. So today, Look at the lecture. It took me around 2 days to make it, and I presented to you a perfect lecture with rules and everything. And trust me, go on your chart, okay? And as I told you guys, that it's not gonna price is not gonna present to you this model every single day, so you'll have to backtest a whole month, okay? Not a week, a whole month, and then see how many times price presented a Judas with a order block. Okay, so how many times our 930 order block or model appeared, you can just backtest, go on your chart, and you will see it. Trust me, if it's there, you will see it. It's that easy, it's that obvious, and it will either come with a order block or with an inversion. You know how to recognize the hype and low probability scenarios as well from now on. So in our upcoming lectures, we'll be covering a very, very important topic, which is power of three. 60-minute power of three to be on is very important for you to understand. So we're going to be going over 60-minute power of three, how I use AMD cycles on higher time frames, and how I know my bias by using macros on higher time frame as well. So we're going to be talking these two topic, first power of three, and how I decide my bias by using macros on higher time frame as well. So I hope you guys found this lecture informative. I'm going to be catching you guys soon with another lecture. Until then, take care, pray for me and my uncle, and good luck.